Welcome to Finantax Clips. Have you ever wondered what your realtor isn't telling you about the best time to buy or sell a house? We've all heard the old adage, location, 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 but there's another crucial factor at play that doesn't get as much airtime: timing. The real estate market, much like any other market, experiences its fair share of highs and lows. And while these fluctuations aren't always predictable, understanding them can be the difference between a good deal and a one. Now, you might be thinking, surely my realtor will guide me with this. But remember, a realtor's primary job is to close the deal. They may not always disclose the subtle nuances of market timing that could significantly impact your investment. So, how can you gain this knowledge? Let's firstly, understanding the broader economic landscape is paramount. In a period of economic growth or recession, are jobs being created or lost? Is the population in your area growing or shrinking? These factors can significantly influence housing demand and, consequently, secondly, interest rate trends. Believe it or not, a 1% change in interest rates can impact house affordability by as much as 10%. Lower rates generally mean higher house prices, and vice versa. So, keep an eye on the Federal Reserve's movements. If rates are expected to rise, it might be a good idea to buy sooner rather than finally. Local development plans. Is a new school or shopping center being built nearby? Are there plans for a major highway expansion? Projects can drastically alter a neighborhood's appeal and, in turn, house prices. Local councils often have development plans available online, so a little bit of research can go a long way. By understanding these factors, you can potentially save thousands on your real estate transactions. For instance, buying during a period of economic downturn, when interest rates are low, and before the announcement of major local development plans, could allow you to get a great deal. On the flip side, selling when the economy is booming, interest rates are high, and after the completion of attractive local developments, could significantly increase your property's value. Now, this might sound like a lot to take in, but remember, knowledge is power. The more informed you are about the market, the better decisions you can make. And while realtors can provide valuable guidance, they may not always be able to delve into the intricacies of market timing. So, do your homework, keep an eye on the economy, watch interest rate trends, and stay informed about local development plans. Your wallet will thank you. Doing your research on market timing could potentially save you thousands. Thanks for tuning in. If you liked what you saw, consider joining our community by subscribing to the channel. Your support keeps the content coming. Don't keep the awesomeness to yourself. Share with your friends who might dig it too. Appreciate. What are some neighborhood issues your realtor might not be willing to disclose? It's a question that's worth your consideration. Let's dive into it. You see, your realtor, as much as they are there to help you, their primary objective is to close deals. It's how they earn their living. This means that they might not be as forthcoming about certain neighborhood issues that could potentially affect your quality of life or the long-term value of the property. Think about it. Upcoming developments, for instance. Your realtor might not tell you that the quiet park across the street is scheduled to be replaced with a bustling shopping center. They might not mention that the quaint, rustic feel of the neighborhood you love could be disrupted by a new high-rise apartment complex. The same goes for zoning changes. Your dream home might be in a residential area today, but what if it's rezoned for commercial use tomorrow? Then there are local disputes. They might be disagreements about property boundaries, noise complaints, or even conflicts within the homeowners association. These disputes can be stressful, time-consuming, and in some cases, costly. Your realtor may not disclose these issues, but there's certainly something you'd want to know about before making a purchase. So what can you do to protect yourself? The answer lies in doing your own research. While your realtor can provide valuable insights, it's also crucial to conduct independent investigations. Talk to the neighbors. They can provide first-hand observations about the neighborhood, including any potential issues that you should be aware of. Visit the area at different times too. A neighborhood might seem peaceful in the middle of a weekday, but what about rush hour, or late at night, or on weekends? You want to make sure that you're comfortable with the area's vibe throughout the day and week. Also, don't hesitate to look into local news and community forums. They can offer a wealth of information about the neighborhood's dynamics, any upcoming projects, or ongoing disputes. It's always better to be well informed than to be caught off guard. In conclusion, getting a comprehensive understanding of your potential new neighborhood is crucial. It not only helps you make an informed decision, but also sets the stage for a happier, more peaceful life in your new home. Remember, your realtor is a valuable resource, but it's also essential to do your own due diligence. After all, it's not just a house you're buying, you're investing in a neighborhood, a community, a lifestyle. So make sure that you're well informed about all aspects of your investment, because at the end of the day, you're the one who's going to live there. And you want to make sure it's a place you'll love to call home. Are you aware of the negotiation tactics and commission structures your realtor uses? This is a question that often goes unasked, and yet it's an essential aspect of any real estate transaction. Realtors are masters in the art of negotiation, and that skill serves not only you, but also them. You see, a realtor's commission is typically a percentage of the final sale price. The higher the sale price, the larger their commission. While this incentivizes them to get you the best possible price, it also creates a potential conflict of interest. They might be more inclined to push for a higher sale price rather than a quick sale, or a price that's more in line with your budget. Understanding this dynamic is the first step. The next is to familiarize yourself with the standard commission rates in your area. These rates can vary, but they typically range between 5 and 6%. Knowing this range gives you a benchmark when it comes to negotiating your realtor's commission. Now let's talk about negotiation. This is an area where your realtor truly shines, but it's also a skill that you, as a buyer or seller, can and should hone. The price of a property isn't the only thing up for negotiation in a real estate deal. Everything from closing dates to contingencies, and yes, even the realtor's commission, is negotiable. However, it's essential to approach these negotiations with tact and understanding. Remember, your realtor is your ally in this process. Their expertise and market insight are invaluable. While it's crucial to ensure your interests are protected, it's equally important to maintain a positive and respectful relationship with your realtor. Negotiating a commission might seem daunting, but it doesn't have to be. Start by doing your research and understanding the value your realtor brings to the table. If you're selling, consider the marketing, staging, and negotiation efforts your realtor will undertake. If you're buying, think about the time and resources your realtor will spend finding you the perfect property. Once you have a clear understanding of this, approach the topic openly. Discuss your expectations and concerns. If your realtor is professional and values your relationship, they should be willing to discuss their commission openly and negotiate if necessary. Remember, every dollar counts in a real estate transaction. Being assertive in negotiations can not only save you money, but also ensure a fair deal for both parties. So don't shy away from discussing commissions and negotiation tactics with your realtor. After all, understanding these aspects is a crucial part of making informed decisions in the real estate process. Remember, being assertive in negotiations can ensure a fair deal for both parties. What property-specific challenges might your realtor not disclose? This is a question that could save you from future headaches and financial pitfalls when buying a home. It's not uncommon for realtors to keep certain information under wraps, especially if it could potentially deter buyers. So what are these property-specific challenges you should be aware of? Firstly, the history of the property might have its own set of secrets. For instance, previous damage due to natural disasters such as floods or earthquakes might not be readily disclosed. These incidents might have led to structural weaknesses or other issues that are not immediately visible. Then there's the possibility of ongoing disputes. These could range from boundary issues with neighbors to legal problems related to the property's title. Such disputes could not only sour your homeowning experience, but also lead to substantial costs down the line. Additionally, the neighborhood's future might hold developments that could impact your property. Perhaps there's a high-rise tower due to be built that would overshadow your new backyard, or maybe a busy highway is planned nearby, potentially increasing noise levels and affecting your home's value. Now you might be wondering, how do I uncover these hidden challenges? The answer lies in 2 words: due diligence. Start with a thorough inspection. Don't just rely on the standard home inspection your realtor arranges. Consider hiring your own independent inspector who can provide an unbiased assessment. They might uncover issues that the previous inspections missed, such as mold, termite damage, or faulty wiring. Next, dig into the property's history. Look into past insurance claims made on the property, which could reveal previous issues. Check public records for any legal disputes or liens tied to the property. Don't forget about the neighborhood's future. Look into the local development plans at the city planner's office. You might discover upcoming projects that could affect your quality of life or your property's value. Lastly, talk to the neighbors. They can provide invaluable insights into the area's dynamics, any ongoing disputes, and future developments. Remember, buying a home is one of the most significant investments you'll make, so it's worth taking the time to dig deeper. Don't just rely on what your realtor tells you. Do your own research, ask probing questions, and make sure you're fully informed. Due diligence can save you from unexpected expenses and complications down the road, so don't shy away from it. After all, it's not just a property you're buying, it's your future home. Does your realtor provide you with a comprehensive analysis of a property's long-term investment viability? In the realm of property investment, the focus often lies on the immediate transaction. A property's potential for appreciation might be highlighted, but what about its long-term investment viability? This aspect is often overlooked, yet it's crucial for anyone considering a property as a long-term investment. Let's delve deeper into this. A property's value over time can be significantly influenced by various factors, such as the neighborhood's growth potential, upcoming infrastructure projects, and changes in the local job market. As you can see, a broader analysis of the area's economic prospects is critical when assessing a property's long-term investment potential. Dive deep into local economic forecasts, urban development plans, and demographic trends. Consult with experts in related fields like urban planning, economics, and property investment. They can provide insights that go beyond the scope of typical realtor's analysis. Remember, it's not just about the here and now. It's about how the property's value could evolve over time, and how this aligns with your long-term financial goals. Don't just look at the property in isolation. Consider it within the context of the wider community and economy. In conclusion, while realtors can provide valuable insights, the responsibility for understanding a property's long-term investment viability ultimately lies with you. Ensure your investment aligns with your long-term financial goals. After all, a property is not just it's an investment that can significantly impact your financial future. Appreciate you for tuning in. If you found this analysis helpful, consider joining our community by subscribing to the channel. Your support keeps the content coming. Don't keep this valuable advice to yourself. Share it with your friends who might be interested too. Appreciate it a ton. Are you utilizing technology to its fullest potential in your real estate investment journey? In the digital age, there's a wealth of technology at our fingertips that can enhance every phase of the real estate investment process. Let's take a closer look at this. There are various platforms and tools available that can help you research and analyze potential investments. For instance, real estate apps can provide you with up-to-the-minute property listings, while online databases can give you access to detailed property records and market trends. Furthermore, virtual reality can allow you to tour properties remotely, saving you time and travel costs. Digital tools can also streamline the transaction process. Electronic signatures can expedite contract signings, while online payment platforms can simplify the transfer of funds. Lastly, technology can aid in the management of your investment properties. Property management software can help you track rent payments, schedule maintenance, and communicate with tenants. As you can see, technology has the potential to significantly enhance your real estate investment journey. Leverage technology to streamline your investment process. So don't be afraid to embrace the digital revolution. It could be the key to unlocking your real estate investment success. Thanks for tuning in. If you liked what you saw, consider joining our community by subscribing to the channel. Your support keeps the content coming. Don't keep the awesomeness to yourself. Share it with your friends who might dig it too. Appreciate it a ton.